Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you live as always from the CNBC TV18 studios. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Morning, Nigel.
Morning.
It seems like the bulls are in complete control of this market. Of course, some big events lined up like the election results on Sunday, but give and take everything, this is an uptrending market and I guess everyone's ready for it.
Yeah, it's been a fantastic November, so to call it, and I think everyone's waiting by whether Santa's going to come to town in December itself, because that Santa Claus rally will really get these markets up and going.
I mean, actually, November has been quite fantastic for global markets, right? I mean, it's broken lots of records, and we'll put some of this data out a little later down in the day, but it's been a wild month, November. So let's just quickly tell you about today, right? I mean, and we'll pick up from where we left off yesterday. The Nifty broke out and it continued its breakout, which we saw day before yesterday, with strong momentum. For the Nifty, it was a strong rally, follow-on buying. I mean, you just look at the DII number, the institutional flows, which are starting to come back in full force. So what are we looking at? We're looking at new highs, which, I mean, 100 points away, so it's going to happen. It's a matter of time. Now, overnight, there's not very much by way of a decisive handoff from Wall Street, neither here nor there kind of a day. Nasdaq was down a little bit. It was a mixed session. Some data came through. Third quarter GDP, the second revision to it was upwards. So that's good news. But and of course, core PCE, which is the inflation number which the Fed looks at, that was revised lower. That was revised down by about 10 basis points, 2.4 went to about 2.3 odd percent or so. But the point is that, and this is essentially what we are talking about, the Goldilocks kind of scenario where growth continues to chug along nicely, inflation comes off and, you know, it hurts no one and everything is okay. But can it remain like that? At least for now, it seems to be the case. We had some commentary from Fed officials as well. So Bostic and Mester both came out and said that the current Fed policy is well positioned. I mean, the policy that is already underway, which is to say that maybe the last of the hikes is behind us. The last hike was the last one, and we are basically going to be on an extended hold. Now, the market, of course, is not saying that it's going to be an extended hold. Markets are positioning themselves for rate cuts. Some are saying in the first quarter of 2024, but for the whole of 2024, almost everyone expects rate cuts. Will that be the case? The 10-year, in response to the data, in response to comments, etc., lost about 5 basis points. So 2 days, the 10-year is down 10 basis points. We ended about 4.27. I mean, technically speaking, you're basically looking at about 4.05 kind of levels on the 10-year, which is, I mean, a far cry, which will be a far cry from the recent highs. Oil prices moved up a tad bit, about 1.5%. We are back at about $83 per barrel. OPEC Plus meeting today, lots of discussion, reports suggesting that they're trying to resolve what to do with the quotas. I mean, the earlier meeting did not happen. This is the delayed meeting which is taking place now, and we'll see if output is cut. That's not the base case, but it's possible. In the near term, just to circle back to the levels here, the Nifty perhaps heads to the all-time high, which is 20,222. We left off at 21, almost 100 yesterday. And once you get a close above the 20,222 mark, I mean, the medium-term resistance stands at 20,700, in the very near term. Bank Nifty has given a bullish crossover yesterday. And, you know, we made the point yesterday when we started the closing that over the last 4 sessions, the Nifty Bank has added almost about 1,400 points. Last hour was very positive yesterday for the Nifty Bank as well. Resistance stands at 44,740, which is the 61.8% retracement. And then the 45,450 kind of levels, which is the 78% retracement of the entire fall before it can head to its own high, the Nifty Bank that is. On the way down, the support comes in at the 20-day, which stands at 43,695, almost 43,700 kind of levels. And of course, I mean, the big Q is the election, state election exit poll results, which we will get later in the evening. So in a way, you know, if it's going to be dramatic, tomorrow is kind of the semi-finals by way of market reaction. On Sunday, we get the actual results. And on Monday, we'll get the full sort of picture about politics, political economy, and the discussion which takes off from that. Sonia.
Oh, absolutely. You know, I think, as I said, the bulls are in complete control of this market. You can sense it with the internals as well, right? Yesterday, you saw the Bank Nifty breakout. So not just the IT stocks, which have been doing very well. We'll talk more about that later. But there is a breakout in the Bank Nifty as well. Now the Bank Nifty almost at that 45,000 level. A big move is what we saw yesterday. So that could be a leadership area for the market this morning too. Now, Prashant was talking about how domestic institutions have come back in a big way. But don't lose sight of what's happening with the FIIs as well. In the last 5 days, FIIs have been buying consistently, and they've bought over 5,300 crores in the cash markets in just 5 trading sessions. And if you remember, in the preceding few months, there was a little lackluster move from the FII. So FIIs have also come back in a big way in this market, and both, those communities have bought in the cash markets. There is some nervousness definitely ahead of the exit polls, but I'll be watching out for the IT space very closely. Remember, it is pretty much a Goldilocks scenario for the IT companies now. The US GDP numbers were very strong, higher than what the street was expecting. The US bond yields have cooled off. In fact, I think the bond yields ended below that 4.3% mark. So those two positive factors will ensure that the IT space continues to assume leadership, pretty much something that you saw yesterday as well. So both IT and banks could fire and hence take the markets to new highs. Also, don't miss out on the new listing today. There are 4 actually, but Tata Tech is the big listing that we're looking forward to. Expected to be a very strong listing, strong pedigree, good growth company. So, a big premium is what we list at. But once again, the question is, what do you do post-listing, right? If there is that big bumper opening, like we saw in the past, then do you buy, do you sell? All of that will, of course, are questions that remain to be answered. But for now, the Nifty is holding on tight to that 20,000 psychological mark. So the going is pretty good.
Well, that's right, Sonia. The question is, the November series has been so good. Can the bulls end it on a high? They'll really be wanting that. And at the start of the series, you mentioned it. Don't be so worried that the FIs are net short. That could be actually a blessing in disguise. And if you pull up the chart, you'll see that the FI short positions, well, it's come down from around 175,000 net short contracts to around 115,000 now. That's the chart that we're talking about. In percentage terms, it's come down from around 89% all the way to around 71%. So the FIs, they have got stumped on the short side, and that explains one of the biggest reasons why we've seen such a big rally. Now, at the start of the series, we reassured you that, see, April series, well, you had the FIs that were aggressively net short, and you had a good bump up out there. Guess what? At the November series, you've got returns which is close to around 40% higher than what you saw in April. So November series, in fact, has been far better series in comparison to what we saw in April itself. What has worked in the last few days? Well, the Nifty Bank has come back in style. And just in the last 1 week or so, the Nifty Bank has outperformed the Nifty. We haven't seen that for the last few months. So this is very, very good news. And yesterday, you had a bit of a breakout moment. At the start of the session, I was talking about the 50 DMA being a bit of a resistance, the 100 DMA being a bit of a resistance. In yesterday's trading session, if you pull up that chart, you conquered both those two levels. So the Nifty Bank could be the one now that leads us higher because the IT index has done very, very well. That could hold one end up, but the Nifty Bank could actually drive home the advantage. 2 strikes were active, the 20,000 put as well as the 20,100 put, fairly active in yesterday's trading session. More than 2 crore shares getting added out. Then that's what caused the premium, the PCR, to move to around 1.5. There are now 2 strikes I'm going to pull up on the screen. One is the 20,000 put, where you have the highest open interest out there, and the 20,200 call. And since they have the highest open interest, we're just plugging in the numbers. On the downside, 19,975, that's the average of the premium of the 20,000 put. While on the upside, 20,222, that's the all-time high, 20,215. So that's the broad range that you should be having for today's expiry itself. Is it too early to talk about 21,000 odd? Well, 2 factors will play out. If the Nifty can get up and going, Santa Claus rally plays out, maybe in fact 21,000 could be there for the taking in the month of December itself. 2 factors there. One is a favorable state election outcome, and the second factor is a dovish Fed is what the global equity markets will be looking forward to. So we're on a strong footing, but those 2 will be the big cues for December.
All right. Well, that's basically the setup as you need to know as we start.